Hi guys, welcome to today's video. So, I keep mentioning it every single week on every single video about how important it is to think bigger picture for trades. The one thing that every trader should be doing if you're looking for more than a 5-10 cent scalp is thinking bigger picture, thinking higher time frames in your trades. The one thing that I do which gives you a huge edge trading long or short is thinking higher time frames and looking on the daily chart. Now, no daily chart is going to look the same, but what you can get is clues from the daily chart. I'm going to go over DNK today. It was the biggest volume stock of today. It wasn't an easy trade for a trader who likes to just jump in momentum. It never really gave great follow through, but if you were patient, you stuck to the process and you waited for key levels to break and hold, it gave incredible gains today. Absolutely incredible. Today what I want to do is I want to explain to you why DNK was long biased and how you could have traded that stock. Now, the daily chart is key. This one is massively important, okay? I'm going to go over a couple of things with you guys today. We're going to hopefully hit home about why it's important when trying to form a bias for a stock to think higher time frames, the daily chart, the weekly chart, but also volume. We're going to go into DNK now. We're going to look at the daily chart, and what I want you to see is why I formed a bias for this stock to be long. I didn't want to trade it short, and there's a couple of reasons for that. Let's get into the daily chart. So this is the daily chart here. What we can see is it's faded now, and it's been fading for a few months now. It's gapped up. Now, the one thing that's key, the one thing that is absolutely key is look at the volume. When it's been grinding up, when it's been popping and failing, what sort of volume are we seeing? And the first thing we can see is today, 180 million volume. Absolutely insane volume. In fact, it makes all other days and all other time frames look irrelevant until the 23rd of January. It's just faded off and faded off. It doesn't really have a lot of bag holders. And what I mean by bag holders is, imagine somebody's bought a stock and it gaps up on news and it's got a lot of volume. A lot of volume indicates a lot of new traders and investors buying the stock, and then they hold that stock. So with this one here, it's just grinded down, and there isn't a massive level where you can say this is going to be resistance. For me, it was that round about 550 area. I didn't think that was going to be the high of day, the point where it struggled, but we just didn't get there. But if you look at the daily chart, it's just grinded down on relatively low volume. Very low volume, okay? And yesterday, we popped up on 60 million, 70 million. It's still a lot of volume for that stock. Let's quickly look in this one. I'm going to go into FinViz. What's key with looking at a stock is try and give yourself an idea of what the makeup of the float is. This one was 150 million, so it wasn't a really small float, and it didn't have massive institutional ownership. If the institutional ownership was 75%, then they own most of that float, in which case they can manipulate it. But for this one, it wasn't a low float, but at the same time, it wasn't a small cap stock. It was a mid cap stock, okay? 150 million. What I will say is the bids didn't suggest that it was 150 million. Now, what I want to go through today is I want to show you, how to form a bias. The first thing you look at is, where is this stock going to struggle to break through a level? Now, if you look on the daily, the only level we can see where it's sort of sold off and try to pop up was that 460. Now, it's hardly got any volume. The volume is almost non-existent on that day. So there isn't a lot of bag holders to break through. Very strange this one today, but let's get into it. So the daily chart tells us that there isn't any real resistance in major bag holders until at least the sort of 550 area. So you need to see that level test and fail for it to be a good short trade. What we look for as a short bias day trader is we want to see a stock with a lot of bag holders, a lot of daily resistance, and a pop and fail into that level. That gives us the clue, the indicator that this stock is weak and it's going to fade. With this one, it opened up this morning. It had already gapped up. Let's have a look at it from yesterday. So with this one here, it had pushed up, tried to break out, failed, sold back off, and then it's opened up today and it's gapped up into daily resistance. And then what's happened is you can see, looking at the stock at the open, it had already tried and pushed and broke through at the just before pre-market finished and the open happens, and it sold off into VWAP, into that daily level, and then it just went parabolic. Absolutely insane move. You're talking, 40%, 6 minutes. Insane. That happens very few and far between. It's not a very common type of movement, okay? So the first thing we say to ourselves, right, well, we know the daily chart hasn't got a lot of resistance. So what we want to see is, where do we look and see where is the first level of support? Well, the daily level, 320. Around over here, it was you pulled out, we had a sort of sell-off, bounce, and sell-off again. It was in intersection in between there. It's not an exact science. We pulled back. So we say to ourselves, first level of support is 320. Okay, and then we break up, enter in here long, pull back, enter in here long, and we squeeze back up. And then we say to ourselves, okay, where's the next pullback? Where's the next level of support? We pop up, fail, a little bit of selling, and then make new highs. So the next level of support is, you could see 390s, but let's see around about $4. So we've got 320 and $4 as support. Okay, so what you want to say to yourself, right, is I want to form a bias, which is the first part. I want to know is the stock going to run into trouble? Where is my support? So that's the first thing you look at. And then what you want to do is let it tell you where it's struggling. Let it tell you where support and resistance are, and let it break out of a consolidation. And what we have here is, when the range becomes tighter, that's your consolidation, becomes tighter and tighter and tighter. We formed an upper trend line. It was wedging in, pop and fail. This happens time and time again. Pop into the wedge. Sometimes it'll break up, but it'll fail at a key level and flush back down. You can normally tell this is going to happen after it's failed to break out for a second time. This stock, you have to remember, is it's went parabolic, pulled back, and went parabolic again. So it's went up and it's parabolic. So it is in a long biased trade. It's continue to go up. So it has to either show you it's failed and weak and then break support. With this one, we're looking at around about $4, the $4 area, pushed up and failed. So what happens there is, anybody who was long here isn't worried. Anybody who bought in the morning push isn't worried until 350. Worst case scenario, 350. You possibly might hold to the 320s. The next level people are risking pop fail. They're going to be looking to risk around about $4. So you can see that $4 is held and it's broke. So anybody long over here took profits, potentially took profits, is being stopped out here. Nobody's going to hold all the way down there. So the only people who are trapped here are naive traders. That's not a setup here. Just because it's consolidating around VWAP isn't a trade. You're buying in the consolidation phase. Never do that. You're just guessing which way it's going to go. You might make money and feel good about it, but over the long run, you will lose money. It's a 50-50 trade. The problem being is, when you buy next to support, if it's not the sort of first pullback into that area, then making new highs, you're just guessing, and the likelihood is it's going to flush down. And like all stocks, when they flush, it's a lot faster and it's a lot more brutal than the breakout. Okay, so we break down here, so we say to ourselves, okay, well, we know around about $4 area. Not an exact science, $4 area is a level of previous support that is now broken down. So we need to look and see, is it going to become resistance? We know that the only trades for long traders going up here was the break of pre-market highs after the pullback, risking down to sort of 320s. The next part is traders risking the break, the pullback down to 390s. So the only people who are experienced day traders or who've gone long in this area here, anybody buying here is, I would consider, a momentum trader. You know, they should be in and out. They're not really buying up here and holding. Anybody who bought along here is now out. They've been stopped out. So then we go to the next part of the trade, is who else is trapped. That's what we're looking for. Who's trapped? Who are we, for a short bias trade, who is at risk of being pushed out of the trade? So we know the next level is 320. So it's a very long way for anybody to be worried. Anybody up here is probably already marketed out. You might get some traders, but the majority are already marketed out. The only ones holding here, just not like naive traders, people who hold in the bag, can't give up. Anybody who knows what they're doing is just giving up and took it off there, right? So what do we see? Well, the first thing we see is push into 380s, and it just doesn't go. It's just fading down. There's not a lot of panic. Anybody who was long is now just out the trade. They've already been marketed out there. And then we start to push up again. Now, we know that the only people who have then come into this trade, as it's broken down into this level, are short traders. The short traders coming, they can see support breaking, they wait for a bounce, they get in and look for a retest for, and then they go short looking for the fade. That's what we see time and time again. The fade only happens on a stock with a lot of resistance on the daily. A fade very rarely happens on a stock with little resistance on the daily. So it's set up for the VWAP reject, but it never really set up. But you know, that's what you're looking at. There's nobody trapped at this point now, or potentially trapped. The longs are worried down here. Some potential bag holders. It's only the short traders come in, and then this little push here takes some of those traders out. Those getting in on these lower highs, they're still in the trade. So anybody who's shorted these pops into the 460 area, they're now risking around this area. So majority are probably going to be risking around. You've got two types of short trader. Some will risk the channel, so the bounce pop reject into $4. They're looking for $4 to hold as resistance. So this area is squeezing them out, and the secondary area is squeezing the remaining out. And then when we get to this area here, that's the short traders who are risking that lower high around here, and that's when that squeeze happens here. So this little the wedge break is taking out everybody who got short as support broke and then continued to squeeze higher, and then we pushed up again. And what you can do now is there's two trades you can take. There's this trade here, which is the push in above VWAP into this area, and then the continuation around about this area here. You can take the long. The A plus setup is above 470 and above this major lower high. We push up, fail, push up, fail, and sell off. We just pushed and tried and tried and tried. Anybody getting in here is just guessing that it's going to squeeze. It is a guess. It's an assumption that it could go higher. That anybody who's waiting for confirmation is looking for this to break. What we end up forming is a trend line here, and then what you can see is this 440, which is held 1, 2, 3, 4, 5, 6. It's broken again, but it's failed, and it's broken again. You can see this 440 to 460 is a key level. So what's happened then is we create the wedge. We also have a trend line, but it's not massively. This one here this is a long time frame. So you have a wedge that also is a squeeze of shorts. A wedge break on its own doesn't mean anything. You need a wedge break that is squeezing out the shorts, which is bringing in additional demand. If you need to look at it this way, this is the only way you're going to see big follow through and consistency in your trading. The wedge is an indication that the trade could be on. What we're looking at is key levels to squeeze against. People are going to be risking above 440s and holding, so you can see that the wedge breaks, the volume comes in, and then you have two types of demand. You have the demand for long traders chasing momentum, long traders chasing bigger picture setups, and you have the shorts being squeezed. When you have that extra demand of shorts covering, longs chasing momentum, that's how you get that really big parabolic move and that big squeeze and follow through. That's the trades that we're looking for. Is it a day trader looking for a long trade? So you squeeze up, fails several times at 460, which is that key level here, which is the sell off and a small bounce. So it sells off a lot of times, right? You can see, it bounces into that 460 a few times and just fails. We also have this trend line here, not a major one, but it's still tried to hold a few times. What's key though is when it can't break above 460 and then it breaks back below this 440, 445 level and then flushes. Okay, now you got to remember, maybe the break of 445, some traders are trapped here, some of them might have got out here, they're definitely out there, right? So you're trapping some long traders. Everybody who is looking for the bigger picture, big squeeze, is looking for that 470 to break. We sell off, but we still never ever break the pullback of the previous breakout. This is the first one, it does break, okay, but then this area here is where everybody up here who is risking correctly is looking for this to break, and it doesn't break here. It does sort of pull back, but it doesn't, and then squeezes up again. So what's key, guys, is what I want you to see is you create that bias on the higher time frame, and then you have to be looking and saying to yourself, well, I don't want to be buying up here on the assumption it's going to squeeze and going to go higher, because the risk is all the way down 10%. So you've got a choice. You can either buy as the wedge breaks, risking down here, which is 4, on the assumption you get up 20 to 30%. Up here, it's just a guess. You just wait for that confirmation, wait for that key level, that lower high there of around about 470 is what we're looking for to break. It tried several times and failed, but it just held the support really well for every breakout. This breakout, the support was down here and it never broke below it, and then into power hour it tried again and failed. But look at it again, this level here is where we had another push and squeeze. It still never broke below that. It never broke below previous support. And that's what's key, guys, is you need to be risking against the true levels, because if you're buying up here, you don't want to be risking all the way down there. You're just getting it at the wrong price. If you're thinking about buying up here, just wait for confirmation above that 470. If you want to get in here, you need to be getting in close as possible to where the trade's wrong. The trade is wrong below $4 to $4.90, sort of that, below $3.90. There's a 6% risk from just above VWAP, but when you're getting up into the trade just in front of that 440, you're looking at like 11-12% risk. You can't just jump in there and say I'm going to risk 10-20 cents, because you're just going to get chopped to bits. That's just not how it works. With this one, it was incredibly manipulated. It waited till after hours to squeeze up, get to that 540, which is just around about below that consolidation before it broke down. Not huge volume. It did try and push up and pull back, but really what I wanted to get at with this video is you need to be thinking higher time frame. You need to be thinking bigger picture. You want to be looking at a trade and say, where's the resistance? How strong is the resistance? What are other traders seeing? When all other traders can see the same thing that you're seeing, because that's what everybody's looking for. You're on the right side of the trend. Nobody who does gap and crap, which is basically pump and dumps, nobody is really looking at this type of stock as a pump and dump, because the float's too big, but also what's key is it doesn't have a huge amount of daily resistance. Think bigger picture, try and have a little bit of a wider stop, risking on those pullbacks, and you will become more consistent. And I hope this helps you guys. You know, you can look at it even on the hourly, it never ever broke below that hourly level, below that 380. You know, the hourly pullback and then the push for highs, it never broke below that. It did sell off, but at no point did it break the hourly from the breakout. And that's what's key. Think, if you don't know how to draw lines, you can just use the hourly. I suggest you draw your lines. The longer you watch your stock, the more times you see it interact with a certain price range, the bigger edge you've got. That's why it's easier to trade a breakout into power hour, because you know where the key levels are, where shorts are trapped, where longs are getting in, where the squeeze is going to happen. Hope you enjoyed today's video, guys, and I'll catch you in the next one.